What's going on, guys? This is Anthony from Market Chart Watch. I'm going to give you a very basic rundown on 3 trade ideas for after the holiday weekend, the 3-day weekend. So upcoming Monday. Today is April 17th, Thursday, last day of this trading week. So I've outlined here, I'm just not going to zoom over, a trend channel that has formed over the past few days. So we've had a trend channel where we're meeting support and resistance. We've bounced off it multiple times. And we also have a gap fill down here that we've utilized over the last day. So I'm going to set up 3 trade ideas. These are going to be options trades, and they're going to be noted here below. We're going to talk through each one and show you why these areas of support and resistance are super important. If this video doesn't make sense to you, please watch the video previous to this where I go over the detail in about 15 minutes. So this is going to be much shorter, but basically I just want to show you we have a large scale trend channel here in blue that we're going to utilize for our profit taking and for stop losses. And then we have a gap fill that was formed here that we're also going to use for our stop losses. So this gap fill was after hours trading Wednesday night to pre-market Thursday morning. If you watch my previous video, you'll understand all about gap fills and why those are so important. But I'm just going to kind of pull this out to show you my trades. We have our stop loss areas, our profit taking areas, the prices for each, and how much everything's going to cost. So just keep in mind that this value gap is in this region, and this is what we're using to set up the trades. So trade 1 is going to be a longer scale multi-day trade. So this is going to be like a swing trade. And this trade, I'm going to assume all of these trades are going to cost $500, just given that the market's not open right now. So trade 1 is a call option, a swing trade, multi-day. And the idea of this trade is that if the price breaks out of this value gap and breaks out past previous days resistance, this thing is going to break back up to the top of the channel because there's nowhere for it to meet resistance other than this 200-day moving average, not super important on the hourly chart. So if that were to happen, this $500 trade would net us an extra $750, which is 150% return on your money. That's huge. Now we also have to set up our stop loss where we want to cut out of the trade short. And so for this, I'm going to set it right below our fair, or right before our gap, or right underneath it, so that if we break past the gap, we don't lose tons of money to the downside. Okay. And so for this $500 trade, you're really only risking $250 of that 500. So you're inputting 500, you're risking 250, and your profit potential is $750. So this is a really good risk reward of 2.5 to 1. So that is a great trade, multi-day. Now, if we're going to stay intraday with a smaller move, and we think the stock is going to go to the downside, we can also place a put trade. And so we're purchasing put contracts. And so what would need to happen for this is the stock would need to break down below the gap fill, and that's where we would enter the trade, and then we would exit the trade once we met resistance, or I should say support, here at this trend line. So think of this as extending all the way through here. And now if we were to place this trade for $500, our profit potential is an extra $298, or a 59% return on investment. And to do that trade, we're risking 41% of the money input. So you can see this is a risk reward of 1.5 to 1. It's not as good of a trade as this, but this can be set up as an intraday trade just based on the smaller movement. Now an even smaller move trade, which I would use this in conjunction with the first one, is going to be a intraday morning call spread, or just a call trade. So you're going to purchase the call on this if this trend, we're going to have to bring you in real close here. So we need to get the pre-market data first, but basically if this was the last pre-market candle, my opening trade would be just above the pre-market candle, and my stop would be below the low point of that pre-market area. Okay, so I'm just looking pre-market. Now I'm keeping in mind that my gap fill is also here as well at this line, so I have 2 layers of support that would reject, and then where I would take profit on this trade is at the top or just below that gap fill. So this trade is actually much riskier because you can get stopped out a lot easier, but the risk reward on that is huge, 5.49 to nothing. And this loss would actually be a lot less. It's a 14%, not 24%. So you're actually losing about $60 on this trade. You're inputting the same 500. Your loss potential is about $64, not 124. And then your profit potential on this is going to be about $179. So you're risking about 14% of the money to profit about 40%. So of the 3 trades, the call option is going to be the most profitable over a multi-day period, and it has the highest likelihood based on my previous video that I showed you. This put trade would be great for intraday if the market went in that direction, so we'd again have to wait for confirmation. And then this third trade we would take with call confirmation, so this trade would be taken with this trade sort of at the same time so that we can rise into this secondary trade. Okay, if that's all kind of confusing to you guys, no problem. Go ahead and watch my previous video where I go over this stuff in a little more detail, how I got to this conclusion of these 3 trades being possibilities for Monday morning. Thanks for watching. Like, share, and subscribe, and we'll see you in the next video.